to show you how to calculate how much money you could make a month if you're thinking of buying an investment property. For those of you who don't know, I've been doing property management for 15 years, and I am third generation property manager. So this is a very quick formula that you can do if you're maybe comparing a couple properties or thinking about one and just want a really fast way to figure out if it's something worth investigating. And I happen to have a listing right now, which would make a fantastic rental. So I thought this would also be a good time to highlight this property and show you how to calculate these fees at the same time. So the property that I'm going to be talking about is 100 Tunis Court, and it's for sale in Stephen City. It's a single family home. It's got 3 bedrooms upstairs and 1 on the main level that could be possibly used as a 4th. So this is actually a great investment opportunity because it is currently rented through March of 2021. So 10 months to a year worth of having a tenant in there who have never been late and take pretty good care of the house. So it's always a bonus. So let me share my screen with you so you can see my high-tech Word doc that I use to calculate. Hey, Selma. How to calculate if a property can bring you money every month and how much. So, for example, Tunis Court, the sale price is $254.9, and we know this property brings in $1,650 a month because that is what the current tenants are paying. So we'll leave those numbers for a second, and next you have to calculate your monthly expenses. And to do that, you find out what the taxes are, and the taxes for this home happen to be $1,206 a year, or about $100 a month. Insurance, we're going to say, is about $67 a month. The HOA dues here are $150 a year, or what is that, about $1,250 a month? Not very much. When I'm calculating an investment property and monthly expenses, for repairs, I generally say about 5% of the monthly rent. That doesn't mean that the property is going to have less or more or any of those things. It just means that that's probably a good amount to just kind of have in the back of your mind and maybe have an account kind of set up, because you never know when the water heater is going to break, or bad luck's going to happen and you're going to have to use some of those funds. So I always like to set aside probably about 5% a month. So for this property, that'd be about $83 a month. And vacancy, I calculate about 7% of the monthly rent as vacancy. Again, this property is rented through March 2021, so it's not as big of an issue. But if you're looking at another property and considering it, then for that vacancy, I usually use about 7% of a month's rent. And that's because you just have to factor in at some point your tenant will move out and you may have to carry that mortgage by yourself for at least a month or so. If you're also using property management, this is where you would include that monthly management fee too. So that way you can have a total that gives you just kind of a rough picture of what you're looking at. So the total for these expenses is going to be about $378.50 a month. And to calculate your monthly income, you're going to take that $1,650 a month that you know you're getting in this case, and you're going to subtract your monthly expenses of $378.50, which will then give you about $1,271.50 a month income. And this is assuming you paid cash for this house. If you don't pay cash for this house and you decide, hey, you know what, I'm actually going to get a mortgage, which is also fine and a fantastic way to purchase investment properties. So if you do want to end up getting a mortgage, you are going to want to calculate how much your mortgage expense will be in addition to all of these costs. There's a lot of free online mortgage calculators that take just a second or two to plug in some numbers, and it gives you the amount that you need. Don't forget your monthly mortgage is also going to include taxes, insurance on their own. So that's going to factor in a little bit with this. But let's pretend you put 20% down because it is an investment, and you've got about a 3.8% loan because it's an investment property. Using my mortgage calculator, I figured out that it'd be about $950 a month for mortgage only, no taxes, insurance, or any of that other good stuff included. So you're going to want to take this monthly mortgage amount and add it to these $378.50 that you know you're going to probably be expecting every month. And that gives you $1328.50 a month. So you know with a mortgage, you're going to be expected to pay about $1328.50 a month with all these expenses that you're factoring as well. So you take the $1650 a month that this place is earning, and you're going to subtract these expenses with the mortgage, which gives you about $321 a month, which isn't bad. That's $300 a month that you wouldn't have had otherwise, and is good. I'd say any kind of cash flow that's positive when you're looking at an investment property is good. And how much you bring in every month is really situational to you. There are some investors who want to keep their monthly income low until the home is paid off or until the future, and that's because you still have to pay taxes on that amount. So they want to keep that monthly income as low as possible so that they keep their taxes low as possible. Then there's some other people who want to use that money every month to maybe buy other properties or just supplement their income, so they might need that number higher. So the amount that you bring in every month is very situational, but this is a very quick and easy way to calculate how much you could possibly be earning.